missed the last one too, so for me.
I'd like to call to order. I call the November 28th, 2017 meeting of the Board of Finance to order. On the agenda, we'd like to go to the approval of the minutes.
So moved.
I have a motion to approve the August 8th, 2017 Board of Finance meeting minutes. Do I have a second?
Second.
I have a second. All in favor signify by saying aye. Aye. All opposed? The motion passes. Item number 3 is a presentation. Treasurer, Board of Finance report, November 28th, 2017. Presentation to the Board of Finance. Madam Treasurer, please proceed.
Good afternoon, Mr. Chair and members of the Commission. It's good to see everybody again. I do want, well, I'm fiddling with my microphone. I do want to remind you that this report also includes the annual review of fiscal year 17. So not only are we reviewing fiscal year 17, we're also doing the first quarter of this fiscal year 18. Our investment policies say that this is the quarter that we do our annual review. So we've tried to make that as clear as possible with our front cover sheet. I can't see it.
Yeah.
I can't see it. Oh well. There it is. All right. You're pretty familiar with the agenda and everything we're going to go over. I'll skip to the property tax collections. And again, this is as of this fiscal year, September 30th. And you do see those rolling 3 years, the tax years 16, 15, and 14. And I just wanted to call your attention to the far right-hand column. Even though that says taxes uncollected, I always like to put it in the positive and say if you looked at our June 30th, we were at a total of all those 3 tax years at about 31 million. We're now at the total of 23 million, so you can see it's been reduced by $8 million in just 1 quarter. And that's uncollected taxes, but really when you turn it around, that means we've collected 8 million more in a quarter. And that, of course, has gone to not only the entities, but also to the bottom line of our money for Bernalillo County. So we really want to recognize where that money comes from, and primarily most of it comes from our delinquent accounts department, which you had the pleasure of meeting Pamela Klink, and I'll have her stand for a minute, who heads that department. I told her I was calling her out, so I will. I think for $8 million she can stand, right? Thank you. Also, in the small square on the right is the collection percentage by year. And just wanted to talk about that because 2016, when we look at it, 97.82 means that.
Good afternoon. Sorry. Thank you. Mr. Chair, Commissioners, again, my name is Kenneth Scott, Deputy Treasurer of Finance and Special Projects. And now I'm just going to drill down a little bit more into the different buckets, starting with the liquid funds portfolio. And again, those are the first 2 buckets, the one that's have a really short duration of 1 month, and then the latter 2 to 12 month portfolio. And as you can see, we have a 38% in ICS, and then about 45% in just Treasury notes. Next slide, please. So at the very top in the yellow section, that's where you're going to get your really highly liquid portfolio. And then, of course, below that, you have the 2 to 12 month ladder. And then you finally, at the very bottom, you have the repurchase agreements. What I think the story here is actually your 3rd column from your right. And it's basically the coupon rate. Now, I don't know what you guys do for fun, but what I do is look at finance reports from previous years. And one thing that I can say that's really interesting is the rising rate environment that we're now in. Just this time last year, for example, we were getting 25 to 55 basis points in that short-term duration. And now, as you can see, we're getting as much as 93 basis points in some places. Next slide. Next is the core portfolio. And I'm not going to steal Ms. Duffy's thunder here, but this is that actively managed portfolio that we approved last Board of Finance. One thing that I can say is given that we're in this active or this rising interest rate environment, it's really a good strategy to have active management. So we really appreciate the trust that you guys have put in to us for that. And again, not going into this too much, but these are the different securities that are in that portfolio currently. Next slide, please. Finally, we have the bond proceeds portfolio, and if you can recall, that's the portion of the portfolio that's actually tied to the drawdown for projects. Again, in Treasury and agency notes, very secure, very safe. And again, same story here. You have that rising interest rate environment, which means we're getting much better yields. Next slide. And that's actually what is being shown here on this very last slide. As you can see, we had a 75% increase just quarter over quarter from what we did last year, and that's primarily due to that rising interest rate environment. But it's also due to the stewardship that we've done in the Treasury's office and with public trust to sort of take advantage of that sort of environment. And normally we would have questions, but what I think we're going to do, I'm going to turn it over to Director Sheila Duffy from Public Trust so that she can get through her portion, and then we can convene afterwards for any questions that you guys may have. Okay. I got it.
Thank you, Ken, Madam Treasurer. Mr. Chair, Commissioners, as Ken pointed out and Treasurer Burse, it is the Board of Finance meeting where I present all the annual review, which is your fiscal year-end review from June 30th, 2017. And then after I finish that, I'll do the quarterly review that ends on September 30th, 2017. So I'm not going to belabor each slide because some of this is pretty old by this time. We're going all the way back to June of 2016. But I do want to highlight and add to some of the comments that Ken and the Treasurer made in that the portfolios are doing much better. Part of it is due to the rise in interest rates, but some of it is stewardship and taking good care of the funds, taking advantage of opportunities like the change in the law that allowed for CDARs, and now that we've had several years of stability, we're taking advantage of creating that core portfolio and actively managing a longer segment. So I'll start with the annual review. And again, as I said, I'm going to kind of go through quickly because some of it's pretty old at this point. But I'll just flip right to, this is a 10-year look back at the 2-year Treasury rate versus the 10-year Treasury rate, and the green line is the difference between the two. And what this really is meant to show you is that the shape of the yield curve. When it's a steep yield curve, there's a big difference between what you earn on a 10-year Treasury versus what you earn on a 2-year Treasury. But what we've seen since we've been working here and really over the last 10 years is that the yield curve is flattening. It's the flattest at this point that it's been in 10 years. People are beginning to debate when it will invert. When it inverts, generally means we're in a recession. So it's being watched very closely at this point, but it is the flattest it's been in 10 years. So I'll skip along to, this is just another visual that says the same thing. You see how wide the different maturity lengths in treasuries are in the middle of this graph, and at the far right you see that it's really very tight. That's just telling you that you're not getting a lot of compensation for tying up your liquidity at this point. So last year's theme was mostly about CDARs, and there was a change in the law that allowed for brokered deposits and CDARs instruments. Thank you. I told Ken that I always forget to flip the slides, so he's here to support. Thank you. So that was something that we had to rewrite policy. The legislation changed, then the policy was revised, and we went out and met with banks and so forth, and now have some relationships with a couple of the banks in town that provide this product. And that product was paying when we started, pretty substantially more than the savings accounts. It's probably not quite as substantially more at this point, but it's still been a very good liquidity product for that first bucket, the 30-day and in liquidity needs. The next slide really just shows the change in policy language that allowed us to do that. And I'll skip through to, as of June of 2017, you can see, I just want to point out that this is formatted differently than you'll see in your quarterly report. When we came up with the buckets, we also rearranged the way we present our materials so that you can see the most liquid down to the least liquid funds you have. But last year, or the end of last fiscal year, your CDARs are there on the bottom, and you had a $60 million obligation to have $60 million mature within 30 days. We actually had more than that. It was up to $100 million because the CDARS products were performing pretty well at that time. Since then, we've taken some of the money out of the CDARS for various reasons, but I'll go into that later. The next slide goes all the way back to June of 2016, where we didn't have those products available to us, and our yield was quite significantly below. So we were yielding 40 basis points, and a year later we were yielding over 1%, just over 1%. So again, it was a rising interest rate environment, but also the better performance on the highly liquid funds really helped the performance of the whole portfolio. So looking forward to 2018 strategy, we'll continue always to hold the priorities of safety, liquidity, and then yield. We have carved everything into the 3 buckets now, the 30-day and in bucket, continuing the 12-month ladder of having at least $5 million mature each month to cover the operating costs of the county. We updated the procedures to make sure that they reflect all the changes. This change in strategy did not require a change in policy. This was all contemplated. This strategy was contemplated way back in 2014 when the policy was rewritten then. But we waited a few years, both due to market environment and just wanted to get, steady on our feet and have some track record with you and then launch into this strategy. So the liquidity portfolio, as I said, the very liquid is in the CDARS for the most part, and then you still have your ladder, and then we'll have the core portfolio, which I'll go into more in the quarterly report. And then, of course, we still have our bond proceeds portfolio, which is tracking the capital projects spending. The new portfolios, the liquidity portfolio is benchmarked to a 1-year treasury because really it's a 1-year ladder, so that makes sense. What you want to look for in your benchmarks is that they accurately reflect your strategy. So in the liquidity bucket, you have your benchmarking to a 1-year treasury. In the core portfolio, we have the ability to go out a little longer because, as you recall from previous presentations, these are all reserve funds. So they're your state-required reserves, and then they're your 5% of your general fund reserve. And so those are funds that you know and comfortable and easily identifiable that you don't need on a day-to-day basis. So those can be invested out a little bit longer, so we benchmark those to a 1 to 3 year Treasury agency index. I've basically just already said that. So that's about it for the annual. If you have any questions about the annual report, I'm happy to take those now before I move on to the quarterly, or I can just keep going if you like. Mr. Chair, Commissioners, thank you. Okay, I'll keep going. Again, thank you, Kenny. Again, I'm going to skip through the economic slides because they're a little dated at this point, but I will, except for the dot plot. But I will say that, we're all watching the Fed. There is probably a 90% probability that they will increase the short-term rate again in December, so that will benefit the portfolio as well. This chart that you see up here is the Fed dot plot, and that's kind of where they see consensus forecasts of where they think the rates are going to go. So you see it continues to trend up into next year as well. And that's the great debate now, is how many times will they move next year? There's a couple of big factors, is the economy performing well, and what's happening with inflation? So if inflation does not is not where their target is, which is 2%, it probably won't move as much. But if we see some uptick in inflation, we probably can expect 2 to 3 moves next year as well. So I'll skip through the rest of the economic slides and go to last quarter's strategy was where we were really, in March, we really introduced the concept of the 3-bucket strategy. In June, we were ready to really launch, and so we presented it one more time, and now we are launched, and it's exciting. As of September 6th, we actually moved $64.5 million into the core portfolio. We created another sub-account so that we can benchmark it to that longer-term benchmark and that we can actively manage that. Now that will have a quarterly approval. So the ladder portfolio and the core portfolio have a quarterly strategy approval. And the bond proceeds is for every trade. We have to get a signature from the manager and the treasurer to make sure that we're keeping track of the capital draw schedules and so forth, and make sure that everybody has a voice in how much of that money is needed. So we have, you can see the biggest thing to look at here is you can see that the ladder, there's the lower right-hand portion of this slide, you can see a pretty smooth ladder of maturities. And then if I flip to the next slide, you see the core. So the core is longer, if you look at that same chart in the next slide. So you can see that that bucket is longer. The core duration, I'm going to focus right on the bottom left, and I know these numbers are kind of small, but the duration when we moved all the securities over there was 1.7 years, and the benchmark was at 1.87 years. So really, if you want to actively manage account and measure your performance against a benchmark, then you're really targeting having about the same duration as that benchmark. We have made one trade in this portfolio already, and now our benchmark as of the end of October was 1.81. So we are right in line with where we want to be at this point. It's not going to be a super actively traded portfolio, but we do want to make sure that we don't slip. If you don't trade at all, your duration is going to just continue to slide down. So we want to make sure we stay in line with the benchmark. So the implementation, as I said, is underway. We moved the funds as of September 6th. The duration is over 1.8 years now. The procedures are in line with the policy, and the liquidity portfolio has your operating needs in mind, so you have enough maturing each month to cover your operating expenses. On to the bond proceeds portfolio. Again, this is completely based on your project draw schedules, so we have at least $1.5 million maturing in this portfolio each month. There was a new issue. It is now funded and been invested, so that happened in November. And so that it makes it a little bumpier because we're waiting to see how all the projects in the GRT bond that are going to be funded by the GRT bonds are going to be cash flowed out. So we don't exactly have 1.5 million. We have more right now while we figure out the draw schedules. And so that's it for both the annual and the quarterly. If you have any questions, I'm happy to take them now.
Any questions? No?
Thank you, Mr.
Thank you.
Chair, Commissioners.
Thank you.
Kenny. Thank you.
That would conclude our presentation, Mr. Chair. And moving on through the agenda
To approvals?
for the approvals. Yes, sir.
Okay, so we're moving on to approvals, finance, investment, advisory, and fund management services. Are you going to do a presentation on that? Or we just go ahead and move on this?
I was simply going to talk through it, and if you had any questions, I'd be glad to answer those.
Okay.
I had no formal presentation.
Okay, well, go ahead.
Thank you, Mr. Chair. We do note that the investment advisor and fund management services contract will be expiring February 10th of 2018. Because of that date, and our next Board of Finance meeting being February 13th, there's a gap there of letting that contract expire with whoever we decide on the RFP. So what we're asking for is that you authorize the Board of County Commissioners to award and execute that professional services agreement whenever, if it's probably going to come, I think we're looking at January, to have that to you to be done and executed. In that way, there won't be any gap in the contract at all. And that's pretty much the mechanism that we have going on here. It's just a matter of timing with the next Board of Finance meeting is after the contract ends, and we don't want to see that gap.
Mr. Chair,
Commissioner?
move approval.
So I have a motion to authorize the Board of County Commissioners to award and execute the professional services agreement for investment advisory and fund management services to the firm that demonstrates superior experience and capability for providing investment consulting services and that are crucial for public fund portfolio management.
Second.
And I have a second. All in favor?
Mr. Chairman, may I
yes,
have a
Madam Chair.
question? Madam Treasurer, this contract was awarded through an RFP? Or
Yes.
there was a competitive process for this?
Correct.
All right.
And there will be for this one. It should be coming out, we're estimating next week, actually.
Great. And so the contract will be awarded in sometime around the beginning of next year?
Yes, ma'am.
Okay.
We
Thank
hope
you.
so.
Thank you, Mr. Chairman.
All in favor signify by saying aye. All opposed? Motion passes.
Thank you very much.
Thank you, Madam Treasurer.
I wanted to take a minute, if I could, of the Board of Finance time to recognize someone, a 27-year employee, and all 27 years have been in the Treasurer's office. And she has decided she's going into retirement the end of this year. So I thought this was our last meeting of the year. I wanted to bring this to your attention. And the person I'm talking about, I get very choked up. She has been absolutely wonderful just in the time that I've been here. And I know the other 26 were just as good. And that's Vicki Lucero. She's quite bashful. But thank you so much for that. I appreciate that.
Thank you, Madam Treasurer. Let's see, announcements for the next Board of Finance is Tuesday, February 13th, 2018, at 4:30 p.m. here in the Vincent E. Griego Chambers. I adjourn this meeting. So what we're going to do is we're going to take about a 5-minute break, and then we'll come back and do the our regular administrative meeting. Thank you.